What's going on YouTube? It's your boy Don, aka Dope Boy Vlogs, back with another video. In our last video, we went over trend lines. In today's video, I'm going to go over market structure. Pretty much what market structure is it's pretty much the market setting up for buy or sell setups. It helps you identify when the market is actually setting up for a buy or a sell situation. Okay. Um, I'm going to show you guys how to identify it and show you when you actually want to try and get into these setups, right? So, um, it is three market patterns that I look for, all right? And the reason why I say three because they're the same for the buy and the sell is just flipped around, okay? So, if I was looking for a sales setup and market structure, right, my three patterns that I look for are double tops, right, that look like M formations, a triple top, and also a head and shoulders. Those are my three sell setups, okay? And my three buy setups, like I said, are the same. It's just inverse. So instead of being a double top as our first one, it would be a double bottom, right? The next will be a triple bottom. And don't mind these drawings, they're kind of jacked up. And a inverted head and shoulders. Just kind of give you guys an overall idea of how it's set up. All right. Now, how we actually take advantage of this is we want to wait, right? Then in my last video, I said that patience comes before the actual trade, which it does, right? Um, if you see one of these patterns setting up on a higher time frame, such as the daily or the 4 hour, right? As I said before, those higher time frames have authority over the lower time frames. But it's also going to take this move some time to play out. But like I said, you want to have patience. You want to wait. So if you see a double top forming, right? Or let me back up. If you see price move to a certain level, right, or go somewhere, and it stalls out, right? It forms a top, or it's not breaking a certain level that is going up. If price shoots down and comes back up to retest that level, that is likely to be a double top, right? And as a trader, right, our main focus is to wait for that setup, right? You want to wait for this second leg to form on that double top to get in for that trade. The reason why is because if you took the sell here, right now, and I explain this to my students. If you take the sell here, right, yes, it does drop, right? Yes, it does go in your favor, but the emotions of your trading is going to kick in because you're expecting this probably to kick out a lot more than what it potentially gave you, unless you have like a risk management plan that you're following. But if not, if you take this sell off this first leg, when this thing starts going into profit, you're going to be happy. You're probably going to be adding lots. You're probably going to be wanting this to go further than what it is. And then price is going to pull back just to retest. And if you add in more entries, 9 times out of 10, you're probably going to go on a red, get stumped out, or something in that. Something is going to happen in that scenario when price does pull back up to retest that old high. So that's why I said have patience. Wait for this first high to form. Wait for price to come back and retest and give you the signal on this second leg to tell you, hey, now it's time to sell, right? And same thing with a triple top, right? It's the same situation. We do not want to get in on this first leg or this second leg. We want to wait till this third leg is formed. So if you're sitting here watching price go up, it tests a level, don't break it, goes back down, it comes back up to retest it one more time. It fails to break, goes back down, and it comes back up to this level one more time to test it. If price gives you that signal to take the trade, then you take the trade. A head and shoulders. Now, head and shoulders is a little different. Um, Sometimes you'll see price go up, form this left shoulder, right? Once it forms the left shoulder, price will fall back down, and then it will come back up, break the left shoulder, and it forms a high. Now, the high that it forms a lot can give you a signal to let you know price is going back down. Once you get a little advanced into your trading, you can probably start being able to aim up here for this, but this is not always a guarantee. So I always tell for newer students or newer people that's trading, don't try to aim for this just yet. Let price go up here and play itself out. Once it comes back down and fall below this left shoulder, right? What's gonna end up happening is it's gonna come back up to retest this left shoulder. That's all that Head and Shoulders does. It comes back up, retests this previous left shoulder, and this is the time period that you want to be getting in. And that's how you execute a good trade on the Head and Shoulders pattern. And it's the same way with the buy setups. Price will come down, form a make a low, come back up, retest that same low. This is the area you want to get in on that second leg. Same thing with the triple bottom, right? Not the first one, not the second one. Once price that came down and retested those lows twice, and you see this third time it's retesting and it's giving you that signal to buy, take the buy. And the same thing with the Head and Shoulders as before. Price will come down, form a left shoulder. It'll break that left shoulder, form a head, come back under it, retest it one more time. Usually when it retests it, it'll give you the signal to go ahead and place that buy entry and ride this thing for the long haul, right? But instead of going over this with drawing tools, let's go ahead and look at the charts and see if we can identify some on some candles, right? Now, AU, right? This was like one of the charts I seen right off the bat. Form my Head and Shoulders. If you look, left shoulder goes up, makes a head, comes back down, come back, retests that left shoulder, and it breaks out. Now, some keys to this is you can either take the trade once it retests that left shoulder, or how I seen before early into my career with trading, I seen people say take the breakout of that trade. So, excuse me, if we're looking at this Head and Shoulders pattern form, right? This would be the shoulder, this would be the head, and this would be the shoulder. Once price actually breaks out, this is the neckline. Once it breaks out of this neckline, if you pay attention to these candles, once price breaks, all it does is come back and retest. So this would be the retest situation. So if you ever see one of these forming or formed already, I always tell my students as well, go identify the neckline of a double top, a double bottom, a triple top, a triple bottom, Head and Shoulders, or inverted Head and Shoulders. Go identify the neckline. Because a lot of the times when price breaks that neckline, all it's going to do is come back and retest. And when it does come back to retest, you can place that sell, buy, or whatever is forming in whatever direction it's going. You place that entry, and you'll be able to catch that trade. But like I said, this is the Head and Shoulders pattern, right? And being that we're on the daily time frame, this Head and Shoulders has more authority than something on the lower time frame. But if we were actually trying to take a trade here, what do I do? What I normally do is like to place a array off of whatever. If anytime I see a Head and Shoulders, I like to place a ray right off of the candles where that shoulder is probably going to get tested. And then I draw a box where the right shoulder is going to be, kind of like I'm doing right now. And I just go down to lower time frames, and then I start to try to identify what's going on with those lower time frames. And as you can see, price goes and retests this thing. It never fully breaks it, but always gets pushed back down into that zone. So like I said, if you see that, a lot of the times you could just place the sell right off of where price is retesting that shoulder. And let's see how much drawdown we're talking about. So about 24 pips. If you've been tuning into my videos before, you know my ratio is 33 pips and a 33 pip stop and a 33 pip TP. In this scenario, your stop doesn't get hit, but sometimes you can just wait it out to get that better entry, right? And what I mean by that is if you're looking at this on the daily, right, or if you spot this on the daily, what you kind of want to do is go back down to the lower time frame. And then when something like this does happen, right, when this does happen, you just want to see what price does. If price pushes over that line, right, if it pushes over this line like how it did right here, it is giving you that signal that, It's time to get into this trade, which was this pin bar right here. Remember, we're on a 4-hour time frame, so seeing this on these higher time frames, it tells you what's going to happen. So price gives you a seller's pin bar, a seller pin bar. If you see that, you can immediately take the trade, and then straight profits. It's pretty easy, right? Market structure to me is probably one of the easiest things to identify in trading. Let's see. Like right here, we have I don't like that double top too much. I'm gonna use it anyway, but because they're never going to be perfect, right? It's going to be situations where the market is not going to give you a perfect scenario. So something like this, right? You saw price went up, it came down and went back up again. That's a small double bottom, but it was forming a bigger one overall. So we're just going to use this move up. Price comes down, it comes up forming another high, and then it drops. Right now, like I said, it did go above this first shoulder, or excuse me, that first top. Now, this is why I always recommend not getting into the trade prior to. You could took the trade here, right? Like I said before, you can take the trade there because if you do, you're probably still gonna get well more than you need. But if you want to catch the better move, right? Because if we're looking at this, right, which one's the better move, right? Yeah, this trade right here would have brought you 116 pips, but if we're talking about the better move, right? Which one would you guys rather take? 111, excuse me, 116 pips or 367 pips, right? I would rather take the 367 if I got a chance to get it. So, but it's not gonna always be a perfect scenario. So, like I said, this is why you wait to see how price plays out. Um, Let me try to find some more examples here because we just went over head and shoulders, a double top. Um, Here's another head and shoulders here. Like I said, it's pretty easy to identify, but I'm trying to find a triple top. This looks like one, but I don't like it as much. I'm gonna go back to this triple top I just seen. I don't like it as much, but I'm trying to find a better example. Block this out because this might be something right there. All right, we're not gonna go too far back. Yeah. All right, so this was the example that I was gonna go for. And then I'm gonna go back and look at this other one. Right. Let me break this down to the 4 hour. And sometimes you have to do this with your trades, guys. You got to break them down to that lower time frame. So, like I said, you got to identify them on a higher time frame. But if you're not going down to that lower time frame to really see what's going on, then that's gonna mess you up a little bit. Yeah, see, this is why I said I didn't like it too much. Right, we had a two push of a high right here, and then it's not as clear like it was on the daily. On the daily, right, they're a little closer together, if you can see. But yeah, I don't like that example. But let me go check out this other one that I boxed out, and then if that one's good, then we'll see what's up. Mm, it's not a great example, but yeah, it's not the greatest example, but it's something in that area. I'm trying to find, like I said, a good example, but right now it's just looking like that I can't for whatever reason. Um, like here's a good example of a triple bottom right here, right? Price goes down once. Like I said, they're never going to be clean. They're never going to look like a picture or a drawing. But price comes down once, hits again, and it takes off. You want to wait for this third leg right here to form, right? Because you see price made a low once, and it actually kind of dipped below that low, right? Before price came back up. Like I said, I wouldn't consider this to be an inverted head and shoulders due to the fact that These shoulder, if it was shoulder areas, I couldn't get that out for shit. If it was a shoulder area, right, it would be more here. Like these are more so level than anything. So some people might even consider this to be a double bottom, or it could be a inverted head and shoulders on a higher time frame. Now that I'm really looking at it, all right, this could be an entire head and shoulders or inverted head and shoulders. I can't really see it, but yeah, I'm trying to find some examples. It's probably like the hardest thing with certain pairs. Let me go to GCAD, see what I got here. Mm, mm, nice double bottom, right? So I said these pairs are not. I mean, excuse me, these patterns are not hard to identify. Um, you just gotta have an eye for it. Usually, I tell my students like if putting in chart time, right? Because there's a difference between here. Here we go. Here we go. Found one. So here's a good example of a triple top right here. A great example, right? Zoom in on that a little better, right? Three hits to the high, right? At one push here, another push here, and the third push, price failed to do so, and then boom, nice drop. So like I said, you can probably benefit, you know what I'm saying, getting in earlier. But like I said, why do that when you can catch this versus, dealing with this? You know what I mean? Even though this is still 100 pips, like I said, if you want to catch the overall move, just let price play itself out, right? Just the let price tell you when it's ready to actually drop. Because if you caught this triple top right here and you literally waited, um, show you guys kind of like how the market moves in a sense. So like if you're looking at these candles, right? When this green candle formed, once this thing closed, it closed out here. What ended up happening is the next candle that came, price was having a little fight, but it was bearish at one point, right? This candle was bearish, and then the buyers started to come back in, win the fight, close that candle here. And so when this candle opened, 9 times out of 10, what ended up happening is that bullish momentum started kicking in right here, but it wicked out. And as soon as it started wicking out, right, as soon as this thing started wicking out is when you could have took the sell, because you knew at this point in time price was not breaking this high or breaking this high, and you could have took the sell. First candle gives you well over 100 some pips. Excuse me, 80. But this whole trade, we didn't even gotta go that far in depth with it. But that was a good example of a triple top. Took me a minute to find one, but that's a triple top. And I showed you about the double top earlier. Find another example, and then we're gonna go over these buy setups. Like I said, the market's not gonna always be clean, you guys. So sometimes they're gonna be harder to identify. But once your eyes get used to seeing them, you're like, oh shit, here's one, here's one, here's one. Um, Here's a double top right here. And this plays out in a couple ways, right? So if we look at the overall perspective of this, right, this is a big double top, right? That's gonna show on the daily time frame. But if we're looking at it on the smaller, just for the 4 hour, there's two hits to the high. Price goes up, come down, go back up, big candle drop, right? It had extension wicks. Remember I told you guys about those wicks when price spikes out like that. Just because it extends somewhere doesn't mean it's going to go there. A lot of times it's telling you, hey, we ran our course, right? It's time for us to take a break and go the other way. Let me see if I can find one more. Yeah, some of these examples are not that solid on um, GCAD either. But nonetheless, that's pretty much how these patterns look. Um, all right. So next, we done went over the sell setups. Let's go look for some more of these buys. So right here, got a nice double bottom, right? Price drops to the bottom, has some wicks. It kicks up, come back down to retest the same area, wicks out some more, and then straight to the upside. Nice double bottom. Remember, your focus is that second leg. You see wicks pushing to the downside, price extending down there, but rejecting. Um, that's a solid entry point at that time. Trying to find some more examples. Here's another one. Here's another double bottom, right? Price made one low, right? Comes down, make that low, come back up, actually form like a little double top right here. That other bottom takes off to the upside. And then in the trend line video that I did recently, I showed you guys like how sometimes they play off of the trends, which gives you just more confluence on what's actually going on. So if you're actually, paying attention to all elements, you can, find some great setups. Um, Another double bottom, right? Like I said, they're pretty easy to identify. It just depends on what pair you're on. And I didn't want to. Let me go back to AU. Since I'm on a 4 hour, let me just go back to AU. Here's an inverted head and shoulders right here. Nice inverted head and shoulders. That's like textbook if you ask me. Only thing difference is that right wick on the right shoulder of that form is just extended out a little longer than the left shoulder. But like I said before, they're not gonna be perfect. But price came down, formed that left shoulder, formed the head, came back up, formed the right shoulder, gave you a wick. Like I said, looking at this on the 4 hour, or if you draw a support and resistance up and you see that wick, clearly this has been your time period to put that entry in. Or as I said before, if you're just placing, a line, right here, hell, that could be your entry point. But you got to take in consideration risk management and all that. Here's a nice example of a fake out right here. This is a double top, but it had a double bottom in the inside. Price pushed up to the upside, made a top, came down, formed a double bottom to fake out these buyers. All these people that were buying, all they did was push it to the upside. So a lot of buyers that was probably was in this thinking, hey, we're good. Especially if you look at this prior to price was moving up, but eventually what ended up happening is it stalled out. It didn't. It actually literally failed to break higher than the previous high, right? Like I said, forming a double bottom, failed to break that high, but then dropped. So that's why I was saying before, it's just variations of the same pattern. That's why I said sometimes they're easy to identify, sometimes they're not. It just depends on your eyes and how much chart time you're putting in. Because every pattern kind of does. I mean, excuse me, every pair kind of shows it just a little different. So it just depends on you. Nice double top up here. And I'm just going through just so you guys can kind of see this. So you kind of know what to look for. And like I said, I normally do a lot of my work on these higher time frames, right? Sometimes I look to see if I can spot them on the daily. If I can't, I go to the 4 hour. And then from there, I work my way down, right? because I feel like you can, pinpoint your entry points at that time period. But same thing, push to the high, price failed to break that high, retested it one more time. That's where your entry will go. Nice drop. And we don't even have to look at the pips. Another double top. Push to the high. Extension wick. Price couldn't break that high. Another one. Drop. Um, nice inverted head and shoulders here. Big shoulder area. Head, shoulder. But if you look at this, double bottom. This is kind of like a double bottom. But ultimately, all they did was form a head and shoulders. Let's see. See if I can find a few more. Then I'll wrap this up. Another double top right here. So for all my newcomers, I just recommend that if you put in chart time, go to TradingView, right? Once you get on TradingView, just go to whatever pairs you plan on marking up, or not marking up, excuse me, whatever pairs you plan on trading. Go to those pairs, and go start to see if you can identify this stuff. Go try to draw them up, without actually taking the trade. I always recommend doing that because look at this double top here. I almost recommend doing that because it'll help your eyes get used to being able to identify these patterns. Um, and once your eyes are able to identify them, it'd be a little more easier to, find some trades. Especially once you know how to draw up support and resistance and trend lines. The last step is pretty much really like being able to see market structure, to be able to start taking good trades. You'll critique entries and all that later on, but market structure in itself is just one of those things where you gotta put in chart time to see it. But that's literally market structure. Like I said, it's just variations of those double tops and those double bottoms playing out all over the place, and being able to identify it. Now, like I was saying, they do play on broader scales, like how this situation happened here with this head and shoulders on AU. Right, this is, like I said, a big head and shoulders. And if I go down to a 4 hour, you can see that same head and shoulders play out. But you're going to be taking advantage of what's going on here in this right shoulder. And this is why I don't do a lot of stuff on the lower time frames no more, because you're not being able to see this whole situation. You're looking at, if you're on an hour chart, you're just looking at what's going on right here. And this doesn't even look like what's actually playing on a bigger scale. So that's why I said, if you're planning on trying to make some good trades, like keep in consideration of what those higher time frames are doing. Let me show you guys another example, because I have two examples. It was two trades that I had like a couple weeks ago. It was EU and EJ. This was around the time we kind of got the news about the coronavirus. But looking at EU, if you look right here, head and shoulders pattern, right? Price comes up, form that shoulder, comes up, form that head, comes up, form that left shoulder, right? Right off that trend line, boom, go down to the 4 hour. Let's see what this right shoulder is doing. Here's the right shoulder. Right shoulder is technically forming a double top, right? Press to the high once, press to the high again, and then drop. How did I know that? Go down to another lower time frame, and you will be able to see it. Boom. This is that right shoulder area, right? Push to the high, double bottom, fake out buyers, respected that trend line, ultimately forming this double top. Ultimately, that's what this thing formed. That double top, it broke, and it kept moving. Like I told y'all guys earlier, if you want to catch the breakout, the neckline breakout and retest, right? It's that neckline. That's your retest. right? That's the retest. And EJ, like I said, it did kind of the same. Where's EJ? Back out real quick. Oh, let me do that. Now EJ kind of did the same thing, except like this was more so to me. Um, at first, it looked like a triple top was setting up, but like the highs kept getting just a tad bit higher, right? If you just pay attention, like see, it kept going up. So that's why I didn't consider it to be a triple top, but but it definitely was a double, which showed right here on the 4 hour, right? Pushed to the high, made another double bottom, pushed to the high, respected that high, and dropped. But like I said, the whole time it was just a double top that was forming. Delete some of this drawings. Like I said, that's all it was forming the whole time was a double top. And like I said, this is why I don't do too much work on an hour no more, other than looking for reversal candlesticks. And that's something I'll go over in another video. But at the end of this thing, nice double top and price fell out. But yeah, that's market structure. Like I said, it's nothing too crazy. But you know, you can go find market structure patterns on Google. Literally type in Forex market structure patterns. A lot of patterns will pop up. Or you could just keep studying this and keep saying, you know, if you can find these patterns every day. Like I said, go to your favorite pairs, draw them up, and just look for them. Because the more your eyes see this stuff, the better you are at identifying it, right? And if you also need any more help, you know, just contact me on Instagram, which will be in the description box below, or my email. Like I said, I do offer coaching and mentorship. I teach this stuff every day and show people. I do live trading calls at least 2 to 3 times a week, depending on if I'm trading. But yeah, guys, this like I said, this is market structure. It's easy to identify, and practice makes not perfect, but it makes you better. So this is pretty much the end of this video. See you guys on the next one.